Hello and welcome again to the weekly fundamental podcast. In this holiday shortened week, let's see what is in focus. In this episode, I'll take you through the Indian and global markets, and then I'll also talk about some top stock ideas. So stay tuned till the end. Indian markets declined last week with investors opting to book profits. Correction in the markets were broad-based with key benchmark indices, Sensex and Nifty falling by around 2%. BSE mid-cap and small-cap index also saw profit booking. Among sectors, BSE power corrected 4%, whereas BSE Bankex, BSE Energy and BSE Oil and Gas witnessed decline of 3 to 4% during the week. Second quarter earnings season continued to keep pace with expectations. FPIs in India have been selling equities over the past few trading sessions. Now, how are global markets doing and what should you watch out for? Let's see that. At 2% growth, the US economy slowed down considerably in the third quarter. Amid expectations of tapering of stimulus, market participants will keenly watch out for announcements in the next FOMC meeting. Meanwhile, the European Central Bank kept the interest rates and its monetary policy stance unchanged. The US 10-year Treasury yield and oil prices remain broadly stable. Inflation, oil prices, FII flows and central bank policies will be some of the key factors directing the markets in the near term. Further, stock-specific action based on second quarter results and management commentary would continue over the next couple of weeks. Now moving on to the FPI flows, FIIs were net sellers in the month of October to the tune of rupees 20,430 crores, mainly on account of rising risk of inflation, rising crude oil prices and expensive valuations. On the economy front, RBI minutes reflected the members' rising concerns on global inflationary pressures and economic slowdown, especially in some advanced economies, with some members highlighted could have spillover effects on India. Hence, we expect FPI flows to remain volatile in the emerging markets. Finally, coming to the top stock picks straight from our research desk. Our pick of the week is ICICI Bank with buy rating and a target of rupees 900. Now, ICICI Bank reported 30% year-on-year earnings growth and 20% year-on-year operating profit growth. Net interest margins were at all-time high of 4%. The scope of earnings upgrade remains high. Valuations have room for expansion. We maintain buy with revised fair value of rupees 900 at 2.6 times December 23 book value. Our next stock pick is Praj Industries with add rating and target of rupees 370. Praj continues to report strong growth in revenue based on robust order book. The company reported 104.6% year-on-year growth in consolidated revenues and 192.7% growth in PAT. Order momentum remained strong with order inflows of rupees 745 crores in second quarter and took order backlog to rupees 2,235 crores. As per management, inquiry pipeline continues to remain strong from the domestic market and is expected to gather pace from international markets as well. We have factored in the impact of higher commodity price and change in business mix in our estimates. We cut our earnings estimates for FY23 in the range of 17 to 19% and introduce estimates for FY24. We maintain add with unchanged fair valuation to rupees 370 as we roll forward valuation multiple to FY24. Lastly, you can consider buying Bajaj Auto with a target of rupees 4,650. Bajaj Auto reported second quarter EBITDA of rupees 14 billion, 10% above our estimates due to the one-time benefit of export incentives pertaining to previous quarters. Adjusted for that, EBITDA came in 1% below our expectations. Raw material headwinds will continue to put pressure on margins in the near term, but we believe the company is well placed to benefit from strong momentum in exports and higher growth in the premium motorcycle segment through exciting launches. So we retain buy. Now guys, that's all for today. See you next week again. Wishing you all a very happy Diwali and a prosperous new year. Thank you.